Welcome everybody to a new episode. Today we're going to be talking again with Marc Elliott De Lama about mortgages and everything that's got to do with investing on the cost of the soul. Marc, welcome again.
Hello, Martin.
For everybody who hadn't seen our last video and who doesn't know you, can you explain a little bit who you are and what it is that you do?
My name is Marc Elliott De Lama. I'm the owner and founder of a company called Fluent Finance Abroad. We are solely dedicated to understanding how mortgages work in Spain, and we set ourselves up in 2006.
Long time, almost 20 years.
It's our 20th year. Yeah.
Big party coming on?
Big party coming up, yeah.
Big party coming on. All right, let's now get to the serious stuff because I think what we're going to discuss today is very important and I think very informative for a lot of people. We really want to talk today about the mortgage side of investing. So what we've been doing in the last months, me and Marc, our clients, that project that we have been working on, that's what we want to discuss today because it's a lot of useful information that might not be out there for everybody. So let's talk about one of the projects that we've done is multi-unit financing and how that works because I think not everybody knows or a lot of people don't know how complicated this might be in Spain. In the Netherlands, for example, it's completely different than in Spain and that causes people to have different expectations. So Marc, tell us a little bit about how that works. If, say, for example, I've got a client who wants to buy 10 apartments, use them as a holiday rental, and go from there.
Okay. The first thing I want to say is that these are my opinions, my experience. Obviously, some other people may have a different opinion. But so in the 20 years that I've been dedicated to trying to understand how the Spanish mortgage market works, there's certain things that I've come to the realization is that all the mortgages in Spain that are granted by retail banks, like for example Santander, Sabadell, those types, BBVAs, Bankinter, they're all of them are governed by the rules and regulations set down by the mortgage law, which is the LCCI mortgage law, and therefore all the retail banks are pretty much on the hook with every single lending decision that they make. What I mean by on the hook is that they have to report every single mortgage loan that they give to resident or non-resident on a holiday home or a main residence or a rental property, an Airbnb, or even a development loan. They have to report it to the Bank of Spain. And in my experience, that's why I generally get the feeling is that retail banks and the major retail banks are quite cautious when it comes down to making lending decisions. More cautious than maybe someone might be used to from Holland, from the USA, or from the UK, for example, because the rules and regulations are different. That's my general consensus. Is basically all the banks are on the hook to the Bank of Spain.
And one of the things that we found out, we discovered, is that those banks, they don't mind you buy one property. They'll okay you buy a second, but they give you less mortgage. But come the third, the fourth, it's getting problematic.
Sure.
Are there ways around? How would you do something like that?
Well, the first thing I think is that we have to try and understand what it is that allows a bank to approve a mortgage. So basically, because everything is regulated, so the Bank of Spain insists that you have to demonstrate that you're able to afford the mortgage. And most people can demonstrate that they can afford one particular mortgage in Spain, as well as whatever they have going on elsewhere. And they could quite potentially demonstrate that they could afford on income, that's important that I stress, that they can afford a second. But then it becomes really, really difficult to show enough income to then service 3, 4, 5, 6, 7, 10 even, to build a property portfolio. So that's the first thing. Everything that's governed by the Bank of Spain has to be demonstrated that you have the income to service not just that mortgage or subsequent mortgages, but those and everything else that you have going on your main residence in your own country or any car loans or anything else like that. So the affordability is quite difficult to hit.
And how they look, for example, say I buy an apartment as a rental that generates 20,000 euros in income. Does the bank take that 20,000 euros in consideration to remortgage or mortgage another property?
Simple answer to that is no.
Yeah.
That's the simple answer because that rental income, for example, in Spain, there is no such thing as a buy-to-let mortgage. I'm from the UK. In the UK, you have a buy-to-let mortgage system. The big difference in the UK to Spain is that the buy-to-let mortgage market is unregulated. Mm-hmm. So the FCA doesn't really have a say as to that market goes. The FCA only regulates main resident, so your home. So if you have a problem paying your mortgage at home, you have the FCA to go to try and mediate to make sure the bank try and keep you in that house. If, for example, you have a buy-to-let mortgage and you don't pay your mortgage, because it's unregulated, there is no government body that you can go to try and get some extra security. The bank will have no problem in repossessing. That's the UK, and I think Holland's quite similar to that. But in Spain, that doesn't exist. Everything is regulated. Everything is governed by the Bank of Spain. So you have a rental property and you don't pay, and the bank's giving you money on that rental property. The bank has to report this, that they have a problem, to the Bank of Spain. And then the Bank of Spain will then start asking questions as to the bank, why is this into default? And then the bank will have a problem with the Bank of Spain, and that they don't want that to happen. So it's quite easy for the banks just to say, we're not going to do it, because it doesn't really exist.
So for them, there is no benefit and a greater risk to keep on going.
No.
And I think that's very important to know for people, that indeed, where, for example, in the Netherlands and in the UK, you can keep stacking mortgage against the profits that you have from other rental incomes.
Exactly.
In Spain, that's almost impossible.
Yep.
But I also do know that there are ways around, because we have a client that is doing it. Yeah. I think it's very important, like we did, to find out the plans of the client, to sit down, to discuss how he wants to do it, what his possibility is. I also do understand that this might not be the route for everybody. But can you show a little bit or tell a little bit, like, what is possible and for who it is and how that would work?
Okay, so this is quite a very good question, and it's one that I'm going to try and cover to make sure that, again, I just want to relate. This is just my experience.
Yeah. 20 years experience.
I've tried lots of different angles on all of this. I've tried to understand why certain decisions are certain made, and this is what I see. So when we have certain clients who can demonstrate that they are very high net worth and that they're very committed to Spain, mm-hmm. This isn't just like a hobby. This is like, something that they want to do long term. It is quite possible to, as long as they show commitment, and what I mean by commitment is that they're bringing in their own cash into Spain to do this in a serious way, that we've had success with not your retail banks, but more of your private banks, where we've been able to advise the client to set up a company structure, a Spanish limited company, to make it a commercial venture rather than trying to get mortgages in your personal name, because anything that's in your personal name has to be reported to the Bank of Spain. Anything that's done within a company structure, then that becomes commercial.
Okay.
All right.
That doesn't need to be reported?
It doesn't have the tightest rules and regulations. Yeah. So residential, main resident, and your personal names, very, very, very strictly regulated. Commercial stuff, it then falls out of that.
Yeah. Okay.
So the banks can then be a little bit more flexible. But the only banks that really do that are private banks, and private banks won't work with, just anyone.
Yeah.
And so they really will only look at working with very high net worth individuals who are very, very committed to Spain. How do they show how committed they are? Well, they need to bring to show that they're willing to bring, or able, or can bring, or even bring quite a substantial amount of money. And we've been able to create a structure like that.
Yeah.
And we've been able to convince some private banks to consider multiple mortgages on commercial, on rentals.
And because of that, you do have the possibility to actually finance partially a property portfolio.
That is done over time. So,
Yeah.
for example, the first couple, you could get a couple of mortgages on those based on the company figures and potential projected income. But the company then does have to start generating its own income and its own numbers, generate its own life,
Yeah.
so to speak. Because again, if the company didn't do that, then the individual who is investing in that or creating that company will have to have enough income to demonstrate all the lending. So generally we do it step by step.
Yeah.
So we do a couple, 2 or 3, get them working, and you're involved in making them work. And then once the tax returns start coming in for the company, then we can start looking at some commercial lending for the company,
Yeah.
rather than the individual, and that can go long term.
So that's roughly what we're doing now with one of our clients. We started indeed with 3 properties. I think by now we have 7, and I know that the client is planning to buy more to build up that portfolio. And indeed, this was done, well, with your help, with the plan that we've made, setting up a Spanish SL and bringing it to a private bank. So it's very scalable.
Yeah.
Does that happen a lot?
No, because in my opinion, I mean, again, this is just my opinion and my experience, having that laid out in front of you and actually showing people what it actually takes in order to create a Spanish property portfolio, there's a lot of stuff that you need to do, and there's a lot of commitment from the investor.
Yeah.
I get phone calls all the time. Oh, but in the UK, I can just get, mortgages in my own personal name. I just have to put 25% down. The rental income is enough to service the monthly mortgage payments. Everything is done in interest only. That is in the UK, and that's great, but that doesn't exist here.
It's a completely different world.
In order to create a property portfolio for rental purposes or for capital growth or rental, you do have to really, really be committed to do it. And that's creating an SL, that's bringing over a large amount of cash, and being able to deal with private banks rather than your normal retail.
Yeah. So if somebody would come to me and says, Martin, hey, listen, we are looking to buy a couple of apartments. You've got different routes, different possibilities. The rule of thumb I always have is a first one, you need to bring in roughly 45,000 euros per 100,000 that you want to buy, depending on if you want to buy resales or off plan.
Yep.
They can mortgage up to 70% if they're not Spanish resident, and then you've got your 10 to 14% purchase cost.
Yep.
The second property is different. The second property, normally you can mortgage 50 to 60%.
Correct.
This is with commercial banks. How does that work with a private bank? Is that different? Is that the same? Or does that depend again if you're going to buy in your personal name or a company setup? Or
well, if you're going to do company setup and you're actually serious and you want to create a long-term business, investing in Spanish property, given all the complications, which no doubt you're going to touch on in terms of rental licenses and everything else, the bank will say, okay, well, this is a commercial venture. and that will be reflected on the risk. So it's not your main. It's not a holiday home. Holiday homes are considered less risky than commercials. So generally, private banks will be fairly comfortable with lending multiple, but at 50% loan to value.
Okay.
Generally.
And now you're talking about tourism license and everything. Does a bank look at that? Do they keep that in mind? What the plan is, where you buy it for, or what the risk is in this? Because we've seen, for example, now Manilva ban a new tourism license for the next 3 years. How does a bank take that into evaluation, or how does that go? What will happen, for example, very straight situation? Somebody bought an apartment now in Manilva with the ID to rent it out. Possible. Apartment is not built yet, so you cannot do your mortgage yet. How does a bank look to this whole plan, changes, and everything that's been going on?
It's really difficult to answer, Martin, because it is an ever-changing scenario, isn't it? We don't really know what's going to happen in the next few months or in the next couple of years, and the banks don't really know either. One thing they will, again, this is why it's important to understand how you're going to structure this. So you're going to structure it in a company, or you're going to structure it as an individual. As an individual, the banks don't really care, because essentially they vetted you on an income.
Mm-hmm.
So whether or not you rent it out or not,
They don't care.
they're going to say, well, you've got enough income to service the loan, because they demonstrate it. That's why, being able to buy one particular property or two, you can probably do that in your own personal name. That, again, with the commercial side of it, I don't think, again, it's going to be too much of an issue, because we're dealing with private banks, so the private banks will know it's a high net worth individual, and so therefore should be able to manage, especially at a low loan to value at 50%. But don't forget that the banks, every single property will have to be, if there's a mortgage against it, will have to be valued and surveyed by an independent surveyor. So an independent surveyor will probably go in there and then list out all the different restrictions based on short-term lending, if there is something there. Okay. So they would document it in their thing to make sure that the bank know what they're doing, that what they're getting involved in, but also the potential buyer. Yeah. So if there was a clause, or is there condition or evidencia, sort of like a warning saying that, oh, did you know that you're not allowed to do a short-term rental on this because it falls under Manilva, for example, that will appear in the report. Okay. And so the buyer should
always be aware. The bank is aware, and everything keeps, at this point, changing, and it
keeps changing. Yeah, it's quite fluid.
It's I think that's the whole Costa del Sol at this point. Luckily, we see a lot of municipalities being very strong and say, Estepona, they are like, hey, we are not only here, we benefit from the tourists. We don't want to ban it. There's a lot of building, of course, going on. I think that was the main problem in Manilva, why they put a stop on tourism license, because they were afraid that there wasn't enough housing available for the local people. Yeah. But let's get back to mortgages. Is there, on the moment that you start working with private banking, company-wise or private, are there differences in how it works? Are there differences in interest rates, lending periods, age possibilities, etc., from private banking in a company setup against normal commercial banks in a private setup?
Generally, just very general. In a company structure, you may pay a little bit more on the interest rate, not much. Some banks will be quite comfortable with doing a 20-year mortgage or 15 between. Again, these are factors that you need to just keep in mind. The main difference would be the loan to value. The loan to value will be consistently lower at 50%.
Okay.
So it's not for the faint-hearted, really. If you love Spain and you want to get involved in it, great, go for it, because it is quite difficult. But that puts a lot of people off. So if you could do it, manage it, you'd be one of the few that actually have been able to get their heads around it. And so therefore, you could be in a good position.
And do I understand it right? That if you use a normal bank, you just get a mortgage and you get on, you pay and perfect. But if you go for private banking, since it's a 50-50 roughly split, it tends to become more like a partnership, and build a strategy and be a little bit more with the bank about the possibilities and moving forward to grow a whole portfolio, for example.
Yeah, so I mean, with private banks, it all depends on your experience with private banking. But one of the big things about private banking is that they want to have a private banking relationship with you. Private banks can be a bit more flexible. They can listen to you and see what your goals and see what your business plans are, and they will sponsor it. But they would want you to have a private banking relationship with them. What does that actually mean? Well, let's say you have portfolio assets in Holland, let's just say with ABN AMRO, for example. You may have a couple of million invested with ABN AMRO, but you're fed up with Holland for whatever reason, or you don't want to spend 100% of your time in Holland anymore. You want to spend, at least 50% of your time in Spain. So you could be even thinking about becoming a Spanish resident. A Spanish private bank would say, look, we can offer you exactly the same kind of deal, the same kind of options as ABN AMRO. I'm just using that bank just as an example because you're Dutch and
well-known bank.
We're speaking to a lot of Dutch clients together. So instead of having 2 million sitting there, you can bring 1 million into Spain to the private bank, and they can help you manage that 1 million. Now, once you've done that, you then become a private banking customer. So the bank can offer you all sorts of, they give it, sort of lay out the red carpet for you. And therefore they say, and they listen to you more. And they say, okay, so what are you planning on doing? And you say, well, I want to create a bit of a property portfolio in Spain. And they go, okay, we can do that. We can help you because you've done that for us. So we can, manage your money. We can listen to your ideas. We can lend you on from a mortgage perspective because you've done that. So they've got you as a person and your income. They've got your investment into property, and they've got the mortgage on it and the collateral and the equity within that portfolio. But they've also got a third thing, which is really important, is that you've brought some money
to them.
They call it fresh money to them, and you're a complete customer. So once you've done that, then, as I said, the red carpet starts being rolled out, and they say, well, hey, look, what else? Look at this is what else we have. I mean, I have a client who likes investing in hospitals and things like that. One of the particular private banks, they're big, they do their own investments, and they invite certain people to join with them, and he's looking at some private hospitals in Madrid. These are the sort of things that
it opens a new world for you.
A totally new world, yeah.
But one of the things that I probably found the most interesting, that I learned in the last months, is that indeed, to open a relation with a private bank, you need to deposit funds there. One of our clients deposited, let's just say he deposited 1 million there. And against that 1 million, you get an interest, but also you get a credit line. And the fun fact is, because it is with a business, and that interest that you get is a profit, but the interest that you pay if you use the credit line on the properties in the company is deductible actually. So by putting money there, you're gaining interest, free money. Nothing is free, but you're gaining money. And the money that it's costing you to use the interest, That's tax deductible. So
Exactly.
actually, you're building a very interesting style of financing things.
Exactly right. I mean, this is another great point that you touch on. So the tax benefits. So if you're going to invest in Spain and you're 100% you're going to invest in, you love Spain, and you're a fairly wealthy individual, you've got to get some really good tax advice in order to understand what is possible. So so mortgage interest through a company is tax deductible.
Yeah.
So you get rental, you got cleaning, you got all these things that are deductibles. Well, your mortgage interest is also deductible. Now, so if you deposited €1 million in the example that you've given, there is something you can get a credit line, which a lot of people call it a Lombard loan, which is a Lombard facility, which is a credit line, and you can borrow against the money you have deposited. Now, it all depends on what risk profile that money is invested in. You can gain up to 85% loan to value on a portfolio that is invested. So it's almost like a house. The money's cheaper because it's not a house, because houses are, they have to liquidize them, you have to put them on the market, you have to sell them.
Yeah.
With bonds and stocks and treasuries and things like that, they can be sold within an instant. And that's why, the LTV can be a little bit higher and it's cheaper money. So there's a lot of things you can do once you commit
to
that kind of thing. And it's really interesting, but it all has to be backed up by the right professionals.
And it's mainly high net worth individuals, good professionals, an amazing team, financial advice, tax advice, and really start working at it with a plan.
Yeah. You need to commit and you've got to have a plan.
Yeah.
If one of those elements isn't there, it's not gonna work.
And that credit line, for example, you can use for anything.
Anything.
So you can buy, with that credit line, you can buy an apartment, you can buy a house, you can buy a villa. But because you get an interest of, I don't know, say 2%, because I don't want to put a lot of risk on the money that I put in, you get 2% return on your investment there.
Yeah.
I get a credit line, I use that money, I pay, 2.5, 2.6 to something like that. So it's very marginal.
Yeah.
But since the one is a profit, the other one is deductible, it's almost a free loan.
It's clever. It's a clever way of doing it. Yeah.
And it opens the door with the bank for more.
Exactly right. Exactly right. That's where we start becoming a bit more creative with the solutions that we have. It all depends on you, on your profile. What kind of profile have you got? The bigger, the more committed you are, the more options you're going to have. The more you're going to be able to convince lenders and banks to play ball with you.
And how do you see this evolving in the next years for investors, for multi-unit investors? So people who want to buy 5, people who want to buy 10, because what we'll see a lot happening now, for example, in the Netherlands, we've got a change in tax system. The Netherlands is cracking down on people having multiple houses or apartments or whatever as an investment. And we see a lot of money flowing out. A lot of it is coming to Spain, some to other countries. How do you see this process going in the next years? How do you think banks will keep looking at it? Difficult. I understand that it's an impossible question, but do you think a lot will change? Is it still, over the next years, safe for people to invest in Spain and to mortgage?
Yeah, I believe so. I mean, look, the way I see it is that if it remains as tight as it is, if it remains as difficult as it is, and if it remains as niche in the sense of the knowledge that you need or the team that you need to build around you in order to actually get the right advice in order to create something like this, I don't think it's going to get any easier, and I don't think it's going to get any worse, because there won't be that many people able to do
doing it. And I think that is indeed what you see a lot of mortgage advisors, a lot of real estate agents. They don't have the network, they don't have the knowledge. They work, what I see with a lot of mortgage advisors, they work with 1, 2, or 3 commercial banks. They don't know how to do it. That will not change probably in the next years. So the less people who know it, the less likely it is to change.
Yeah.
The more it will stay the same.
Yeah, and I think look, from my perspective, Martin, I'm going to admit it. I'm a geek when it comes down to mortgages.
Yeah, that's why you're here.
I spent the last 25 years trying to understand nothing else apart from mortgage lending. Don't ask me about anything else, because I don't know anything else apart from this. So when I do exams, I've done exams in the UK, I've done exams here. I study the Mortgage Credit Directive in 2014, which came from Europe, which then was rolled out across the whole of the European Union. All of these things that, unless you're really into it, how are you going to sort of understand it in a way that you can create kind of these opportunities or these scenarios, and be able to explain it to a potential investor, unless you really, really, really understand
what you're doing,
what it is, and question as to why these things happen. Like I say, it's just my opinion. I don't know what the future is going to hold. I don't know the law inside and out, but I do have a good understanding, and I'm working constantly with banks to try and push the boundaries just to see what is possible and what's not. And we've managed to help a couple of clients to create something, and that's because we've understood that it can't be done by a personal because of all the Bank of Spain and regulation, and that there is an opportunity for certain individuals to do it via private banking and via company structure.
Yeah.
Now that could change.
Everything could change. Yeah. But if I understand correct, it's not for everybody. It's mainly for the high net worth individuals. And they really need to have a good team to help them to manage it, to set it up. So what we, for example, do for our clients, we help them make the plan, to structure it. We bring them into contact with professionals like yourself, amazing lawyers, amazing tax advisors, to grow the plan, grow the team. So it's all there. And then start the whole process from buying to reforming or upgrading to now even renting the properties with our own rental department. And I think that is something you don't see a lot. A lot of people have a little bit of this or a little bit of that. They have the knowledge, they lack the team, they don't have the facilities, etc. And before we're gonna wrap up and leave it at it, what would be your final advice, your best advice that you can give for people who are thinking of setting up something like this? The one golden takeaway from your years of experience, what would that be?
Take it seriously. Speak to lots of people, and be lucky.
Be lucky.
You need a bit of luck in Spain, because
you need a little bit of luck in life anyway.
you need luck. The reason why I say that is because, in my opinion, all right, this is just my opinion, I don't want to upset anyone, but the level of advice, I think, in Spain is quite low.
Yeah.
Spanish mortgage regulation only came in 2019. What was going on before then? Well, I can tell you, it was an absolute free-for-all. It's an absolute nightmare. And 2019 until 2026, there's still a long way to go for mortgage advice to be at the level where it is in Holland, where it is in Great Britain, where it is in the United States, in Australia. We're still behind. And that's the same, I think, in real estate. There's no regulation in real estate.
Yeah. Luckily, it's coming.
There is no barrier. There is no entry barrier. No. So anyone can be a real estate agent and give whatever advice they want. There's no checks and balances. And it's the same throughout. Yeah. It's very much a buyer beware scenario. The only thing is seek really good quality advice, and it has to be logical. Question everything, because it's a buyer beware. If you invest your money and it doesn't work out, then I'm afraid
It's not for them.
it is, well, whose fault is it?
Well, it's what
It's
you
a,
say. Good advice is hard to get.
but the thing is, there are good advisors out there,
Yeah, 100%.
but
Find
you
them.
need to find them.
That's the thing.
That's the thing.
Is there anything else that you think we have missed? Anything that you think is very important for the people to know that you want to say before we?
Yeah, my final thing is people have always, for the last 50 years, from what I can see, is people have used property as an easy way to do investments.
Yeah.
And it's the same all over in Britain, in Spain, and all over Western world. That now is changing. From what I can see, with the rules and regulations being implemented in my own country, which is Great Britain, the European Union, in Spain, the central governments and governments in general are actually just trying to make it harder and harder for people to use property to make money.
Yeah.
That doesn't mean to say that there isn't way of doing it. It's just the barrier of entry is going up, and I think we found a way that we can do it, but it's not for everyone.
No. So I think with that, I want to thank you. I want to tell the people that there are possibilities, that they need to be careful with who they work with, who they let them advise. But even though things are changing, the Spanish property market is still a very interesting, high potential, and for the lucky one, a very profitable market.
Yep.
May I thank you, Marc?
Thank you very much.
And see you next time.
See you soon. Muchas gracias.